RET now have been highlighting and talking about how retail trading activity has surged and how since the lockdown, the individual, the Aam Aadmi, who perhaps has faced some business disruption, may have faced an income loss, and not to mention is in lockdown, has been looking out for some money-making opportunities, which is clearly not available in, your fixed deposits or, in other investment avenues, not even in your PPF or PF, has now observed the massive rally in the Nifty 50 and in the equity markets, or rather the bounce back that we've witnessed since the lockdown, and is trying now to trade in this market to earn himself or herself a quick buck. And not to mention, of course, digital apps as well have made this entire process very easily. So everyone's taking note of this, including SEBI Chairman Ajay Tyagi, who has highlighted this and some very interesting observations on the increase in retail trading activity in an interview with the Economic Times. He says that trading in cash, as well as, interestingly, the F&O market or the futures and options market, has picked up quite significantly compared to the pre-COVID times. But now the situation is rather perplexing. The average daily turnover, according to Mr. Tyagi, in the cash market between June and now, that's just in the last 1 odd month, is 70% higher than what it was between April 2019 and Feb 2020. Furthermore, if you break up the kind of trades that we are witnessing, most of the trades is coming in from small individual clients who have average turnovers of less than 2 lakh rupees per day in the cash market. That has skyrocketed 140%. We are not just talking about seasoned traders, we are talking about new traders as well, and that's indicative of the number of new Demat accounts that have opened up. Mr. Tyagi has said that the new Demat accounts have actually shot up to 10.23 lakh in the month of May versus the average 5 odd lakh accounts that used to be open in a month. And like I mentioned, the markets as well have rallied. So everybody would be interested at this point of time into looking at what the market is looking at. 44% rally from those pre-COVID lows, the March lows. In such a scenario, according to Mr. Tyagi, of course, it would be in everyone's interest that factually correct and material information is available in the public domain in a timely manner, because you do want to ensure that, everybody has adequate information as well in their hands before they go ahead and make a trade. And that is something that Mr. Tyagi as well wants to convey to all you retail traders. Furthermore, like I mentioned, it may be a bit perplexing, this entire situation, because on one side you have business disruptions, which means income losses or income cuts. But then at the same time, you have individuals going ahead and putting in big trades in the equity markets. Now, what essentially Mr. Tyagi believes is that this could be compensated perhaps by the increased liquidity in the system. Not to mention, fixed deposit rates as well are low because the RBI has been cutting repo rates. So banks as well have been cutting down their fixed deposit rates. The debt market, mutual funds as well are having their own problems. NAVs have fallen. And like I said, with people working from home, they have more time in their hands. They're trying their luck in the market. And Mr. Ajay Tyagi as well flags up that this ease of trade offered by many trading platforms may be another factor. But again, he reiterates that investors need to have the right and timely information and then take a call.